Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish opening white Mariposa yesterday after the previous session's indecisive doji cross. Prices have very recently been basing themselves on the slowly declining medium moving average, highlighted in mauve on my daily chart that's currently at 107.51, and capped by the ever so slowly rising long moving average below, highlighted in gold on my daily chart and that's currently at 108.26. However, this situation right now does not look like it's designed to last. Overall, the market is now back well within the bull channel, currently 106.81 to 109.41, which is highlighted in green of the broken October-based bull channel. I have my doubts about this bull channel now. It was good in October and November when it formed part of the wide V bottom formed between July and November. But the break higher in mid-November, though it managed to achieve its primary target for the July to October bull channel at 109.98, it has seemingly failed to follow on to the secondary hard to reach target X2 in the 111.11 area, so I may soon retire the secondary target. The question now is what is next for this market? And right now it looks like a sideways action between the two moving averages, one below, one above. So far today, well, not much, a little bit lower. We were either side of yesterday's close, but a little bit lower, but we're still well within yesterday's range. Cable, aka sterling against the US dollar. A really unusual, long-legged, indecisive doji cross, coming as it did after the previous session's indecisive spinning top, but it also ended up being a key reversal up, purely because of the long tongue and long tail. Overall, the market 2 weeks ago finished its move up from the September to November double bottom and rounded bottom combination, achieving all its targets on the upside. Since that peak, interestingly right on the 50% Fibonacci line of the big June 2016 to September 2022 move at 126.99, since that peak, we've pulled back a bit to seemingly base on the slowly rising long moving average, currently 124.99, and with the declining medium moving average just below at 124.48. The peak and decline, limited decline so far, is beginning to make me wonder if the action since late August to date may be a potential cup with handle in pattern in formation. I'll know more on this, I hope, by the year end. The one pattern that I do know is in existence is the bow tie formation formed 2 weeks ago, of the short moving average currently at 125.87, the medium moving average and the long moving average. The moving averages did not enter in the correct order, but they did cross over on the 1st of December and indicated a rise immediately after, even if entry and exit were not unanimous. This casts a shadow on the cup and handle pattern, moving it more towards a bullish halfway hesitation idea, though it is still early. Nevertheless, the theory behind this suggests that between 15 to 20 sessions after crossover, so that's between Christmas and New Year, we may see a move upwards in the direction of the moving averages that they crossed over. With the lack of liquidity over this period, I think I might add a few days onto the new year, just in case. It's not looking great as a concept right now. Now, so far today, a decline down towards the long moving average below, just edging below yesterday's range at the moment. Euro sterling. A largest bullish engulfing pattern yesterday after the previous session's indecisive spinning top. That was also an outside day. For the last week and a half, the market has formed a basing action, tethered to the March 2022 to date uptrend below, which is highlighted in bright green on my daily chart. Yesterday was the first attempt higher from that uptrend. Overall, the market has met all its targets, primary and secondary, for the break below the late September to late November bull channel. Topside now, we have the flatlining medium moving average currently at 86.36 as the first obstacle overhead, with the combination of the short medium moving average currently at 86.69 and the April 2020 low at 86.69 also as the next obstacle. Now, so far today, well, a follow-on higher, if cautiously, as prices start approaching the medium moving average overhead. US dollar against the Indian rupee. An immediate countering bullish engulfing pattern yesterday after the previous session's bearish harami. Overall, the market continues gingerly to move higher within the September-based bull channel, highlighted on my daily chart in dark blue, and that's currently 82.97 to 83.57. This bull channel is the emergence from the prior pattern, which is the July to October ascending triangle. This bull channel, the shallow bull channel, is not the most enthusiastic of patterns, but it's still there and ties in well with last week's weekly key reversal up and last month's monthly key reversal up. Now, so far today, not much so far, as prices hold around the close. Above we have the August high at 83.44 and the all-time high at 83.48, whilst below we have the October 2022 high at 83.27. US dollar against the Brazilian real. A key reversal up yesterday after the previous session's shooting star pattern, and that was a type 2 bullish one, just for your reference. It's also the first crossover and close over the slowly declining long moving average, currently 495.34, as well as a proper test of the 50% Fibonacci line of the October 2019 to May 2020 move at 496.81. The cap on the day was the combination of the very slowly declining short medium moving average, currently at 497.30, and the previously broken upper trend line highlighted in purple on my daily chart, and that's currently 497.35 of the August to September move. This is a surprising pairing of resistances, but they were effective yesterday, though I am not so sure how well they may carry on today. Overall, the market is still well within the breach, but repaired, November 2022 to date bear channel, currently 466.51 to 511.45, and that's highlighted in bright red on my daily chart. I'd just like to take a moment to appreciate this bear channel, as it has been in operation now for well over a year. The only other comment I can give is how very much like a head and shoulders pattern the action since late July to date has been. No more commentary than that on that point. US dollar against the Mexican peso. An interesting bearish engulfing pattern yesterday after the previous session's inverted hammer pattern. Prices closed back below the very slowly rising medium moving average, currently at 1740.66. But that hasn't been a big event, as a declining long moving average, currently 1752.73, has been the most active moving average in recent times, capping the market. Below we have the combination of the March 2016 low at 1709.23 and a declining neckline highlighted in green on my daily chart, currently 1709.5, of the February 2021 to April 2021 move. And just underneath those, we have the April 2016 low at 1703.89. The March 2016 low and neckline combo managed to halt the decline throughout late October and early November, but the long moving average is seemingly stopping a recovery at this time. Looking overall, we are just after the market reaching its downside targets, both primary and secondary, for the September to October bull channel, and I suspect searching for the next thing to do. And so far today, a seeming unwillingness to head lower, but also to try back upwards right now as well.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.